Hi everyone, Andrew Marshall here. Today we're going to look at the Avantis Small Cap Value Fund, ticker symbol AVUV. I first heard of Avantis about 2 years ago, but I didn't think much of them at the time. I don't like to invest in a new ETF company because they come and go all the time. Perhaps they don't gain enough investment money or they have a trendy idea that doesn't stick around. But Avantis, after researching them recently, is here to stay, and I think they're a very secure company. Avantis was founded by two men who had key roles at Dimensional Fund Advisors, also known as DFA for short. A big shout out to David Booth and all the fellow Jayhawk alumni. In 2022, Avantis took in $11 billion of new investor money in all of their funds combined. That is amazing growth for a young ETF company and a real sign that they are legit. Another thing that makes Avantis different from other ETF companies is they have the backing of American Century Investments. American Century owns them or helps them in some manner. They provide the HR and all the back office stuff that you need to run an ETF. So that saves Avantis on having to create all of that from scratch. In my Fidelity account, when I look at the AVUV symbol in my account, it actually says American Century. I'm confident that Avantis will be around for many years to come, and the AVUV fund will not be shut down for lack of investors. If you are interested in hearing from one of the co-CEOs from Avantis describe how they think about investing, then I recommend an episode from the Rational Investor podcast. I'll put a link to the description below. We've seen that Avantis is a good investment company. How about small cap value investing in general? Is that a good idea? Well, if you think about it, the reason that small cap value stocks are a good investment is that they're small companies, so they have room to grow, and their value, which means their price has room to increase. They're not overpriced at the moment. Small cap value has historically beaten the S&P 500, 15.3% to 11.7% over the long term since 1972. The trick with value investing is determining if an investment is a good value or is it just a cheap stock. And the way Avantis determines that was described really well in that Rational Investor podcast I mentioned earlier. A large discount rate is like something being on sale. Low price is not enough. You need to know some fundamentals so you can determine that they have good future cash flow and earnings, but they're at a low price right now. Those two combined means the stock is going to have a higher future expected return. Avantis screens all small cap stocks and only invests in those who have the highest expected return. That's how Avantis AVUV ETF is able to beat the small cap index. The next question we need to ask before we invest in AVUV is, does this ETF have a good chance of outperforming in the future? It has outperformed in the past, but we're not going to chase past performance when we do investing. We want something that has a good chance of doing well in the future. We need to know, why does AVUV have a good chance of outperforming the index? Eduardo Repetto says the reason AVUV will outperform in the future is valuations. By continually buying stocks that have a higher expected return and selling those stocks that have increased in stock price and therefore don't have a higher expected future return, makes money over time and outperforms the index. Using portfoliovisualizer.com, we can compare past returns of AVUV versus IWN, the iShares Small Cap Value ETF. At the time of filming this video, returns available are January 2020 through August 2023. During that time, $10,000 invested in January of 2020 in each of these funds would have a significant difference in value at the end of August 2023. The Avantis fund would be worth $15,828, whereas the regular small cap value ETF would be worth $11,973. 13.3% per year versus 5% per year. That is a huge, huge difference. You can see also that the best year for the Avantis fund was better, and their worst year was a much smaller loss than the regular ETF. Before you buy this ETF, you need to realize that you are not buying an index fund. AVUV is an actively managed ETF. If you're someone who can't handle tracking error and you want to see your investments follow an index, then you need to buy IWN. Also, this fund is not as diversified as the Russell Index Fund. Avantis puts caps on how large of a percentage the fund can invest in each sector, but it could be very different than what the index fund is invested in. You should be comfortable with a fund that is less diversified and differently weighted than the index. You can buy this ETF through your broker, same as you would any stock or other ETF. I think this fund is a great complement to the OMFL ETF I discussed in another video. You could use OMFL to cover your mid and large cap stocks, and then AVUV for your small cap allocation. I hope you found this video helpful. If you did, consider subscribing and give it a thumbs up. See you next time.